Hey everybody, this is Jose Blasco. We are about to start. 30 seconds to go. This is sound check. Please go ahead and confirm with a quick message on the chat box that you hear my voice. That would be good for me to see that you hear me well, so I know we can start on time. Thank you Thank you very much. Here we go. Thank you very much. We just reached the starting time for the session, isn't it? So we are now live. I mean, we were live, but with a countdown. So now we are live, ready to start. So let me say a proper hi to you guys. How are you? Good to see you all. Happy Sunday. Hopefully everything is going well, and hopefully you're excited and ready to put some time to learn and develop yourself when it comes to trading, investing, the markets, and everything else. I'm just looking at your comments for now in the chat box. Marcus, how are you? Hello, and fellow traders. Furman, hello, Jose. Hello. Lilan, how are you, Lilan? All good? Roy, how are you, Roy? Sandeep, wonderful. Thank you guys for joining me. Thank you very much as well for your messages. Again, confirming that all is good for us to begin the session. So let's begin today. It's again Sunday. Over the weekends, normally we get together to talk about sharpening. So we take it easy. We are not in a rush. It's weekend time. We are relaxed. So we just go ahead and talk about everything that we need to talk about in order for questions to be answered, or taking certain concepts and taking them to the next level. The market is closed, so we're not in a rush of taking a trade. So in that sense, we can spend this time in a more relaxed fashion. Okay. Before we start, of course, I have a disclaimer, so I'll read that, and that way, that's it. We got everything we need to begin. So disclaimers: the following videos, clips, demonstrations are for educational and instructional purposes only. Tradictive provide these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that the hypothetical results obtained through demonstration do not indicate in any way the results you may receive on using our products. And that's the introduction. That was the disclaimer. We are now looking at TradeStation as a platform, and we are ready to begin. Very good. Very good. Miguel, how are you, Miguel? I believe we owe you a couple of emails. You'll get those answers soon. Thanks for that, by the way. Basaribu, how are you? Nicole Lim, sounds very, very familiar, that name. How are you? Mark, how are you, Mark? All good? Wonderful. So, anyway, so let's go for it. Okay, let's go for it. Let's begin the session. Not sure if Osman is with us today, but I would like to start the day with a question that Osman sent to us. And, many times you guys, I mean, you send many questions to us in a regular basis. And normally we do the best to respond those questions in the email, so that way, you get timely answers and so on. But there are times where really the answer could not fit an email, if you wish, because the answer may create other questions. The answer is maybe complex, etc., etc. So this is the time where I really like to take those questions to the sharpening sessions, so we can kill two birds on one stone, which is to have like a proper answer instead of just a quick email paragraph type of answer. But on top of that, we can go ahead and basically have all of you participate of the answer and the question, which many times those are market situations that may have happened to you, may not have happened to you, and it's an opportunity for everybody to grow and learn, while Osman in this case gets his answer. Okay, so it seems that Osman is not with us. How are you, Froilan? Good to see you. Osman is not with us today, I guess, or maybe he's going to be joining a bit later. But in any case, later, if that's the case, just for you to know, guys, if you ever send a question and we answer in the sharpening sessions and you cannot attend live, then we'll email you and we'll let you know, hey, go take a look at the recording. The answer is there. So, again, you get your answer. Okay. So let's begin. Okay. And so here I took the text, the key portion of the email that is what matters. And I want to read it for you guys, and that way we can go ahead and go through the answers. So Osman said, hope you're well. Very good. I have a question on trailing stop. So the first thing that we're going to talk about here is trailing stop. Okay. With some trades not reaching the final target and coming back to my original stop loss or entry price, which is changed to stop loss. As you can see, it is very hard to be on your screen and managing trades 24/7. So my question is, would you recommend to use an expert advisor for MT4 to automate the process? If yes, which ones? Okay, good. So we are talking about trade management. We are talking about trade losses, stop losses, and we are also talking about lack of time or life getting in the way of you applying the rules of a methodology because maybe the methodology is too active given your other commitments in lives and things like that. And so how would we deal with this? Apart from that, we are talking about MT4, which is a very popular and common platform in the world of Forex, probably the most common of all platforms in Forex. And expert advisors, for the ones of you that don't know, basically refers to a little engine built in MT4 platform where you could do some programming and you could have some automation in the platform, including the stop moving automatically and things like that. Okay. So maybe this would be a good place where to start to answer the question, so everything is understood as we dive deeper. The first thing I would like to talk about is actually MT4 and expert advisor, because again, MT4, I mean, for the ones of you that never seen MT4, let me get one MT4 here on the screen so you get to see. Again, I would say all Forex brokers got MT4. There are very few that may only provide their own specific platform. Okay, so here's MT4. This is how it looks like. Okay, so in case you have not seen it before, that's how it is. Okay, well, actually, since my
incoming mail.
Okay, incoming mail. So since my other computer screens have much more resolution, so let me retile Windows so you get to see. So basically, you have a market watch on the left. You have some data there. All of this. Okay, so and then you have the charts. Okay, and then in the bottom part you have your trades, you have your accounts history. I mean, you have all of those things. So it's just a platform, if you wish. Okay, but notice here on the bottom left. Okay, we have this thing called expert advisors. Okay, and again, as said, MT4, and I'm just gonna move MT4 away now. So as said, MT4 is a platform that is very popular in the world of Forex. Almost all brokers have it. The ones that got their own proprietary platforms, they normally also offer MT4 as an additional platform that they have, just in case some Forex trader coming from another broker don't want to learn the new platform and just want to stick with MT4. So again, it's, long story short, very popular. Okay, and it has expert advisor built in. So now that we know what is MT4, let's talk about expert advisor. So you get to know a bit more about what is expert advisor. Expert advisor basically is a strategy engine for MT4 to run some code automatically. Okay, MT4 has a programming language. The company that created MT4 is called MetaQuotes. So there is a MQL programming language, and that programming language basically allows you to either create your own indicator, for example, or it also allows you to produce pieces of code, okay, programs that not only have market data and inputs and outputs, but actually also have access to placing or canceling or replacing orders. And in that sense, you could actually automate and create what is known in the industry, especially in the Forex world, what is known as a trading robot or a robot or a bot, and all those different services that are so popular in the Forex community, where people subscribe to a robot and you're supposed to become multimillionaire and it never happens. Okay, and there are a collection of reasons for that. But anyway, putting that on the side, expert advisor certainly has some technology power where you could actually program stuff that, for example, moves your stop. So in this case, Osman has a very good point there of thinking, can I rely on technology to move my stops? Okay, and yeah, the answer is you could do that. Okay, now the problem, okay, and he's kind of answering himself in the second paragraph, which I will talk about it in a minute. The problem of using expert advisor, or I should say the problem of using MT4, is that whatever you have in MT4 only works if MT4 is running. which means that that forces you to have your computer running 24 hours a day and crossing your fingers that no internet issues will take place, because if your MT4 gets disconnected from the internet, then it's like your computer is off. So your expert advisor, becomes a dormant advisor and nothing's happening. Okay. Again, this happens with many platforms. Okay. It's not necessarily a bad thing, but at the same time, if you want to rely critical trade management roles and you are going to rely on expert advice to do that. So again, you have the fragility of a regular computer, desktop, laptop, and the fragility of a regular internet connection that you may have at home. So that fragility is there, and you will have instances throughout the year where your stuff should have been moved and nothing happened. Why? Because there was a disconnection from the internet for 5 minutes and that caught you. So these things are going to happen for sure. Okay, for sure. Maybe not in 1 week, maybe not in 2 weeks, but if you look at it in the context of a year, it will happen all the time. MT4 again is very popular, but certainly is not like a very, 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 how do I put it? Like, it's not the most robust platform in the world in that sense. Okay, so keep that in mind. Because again, if that's critical, if you are trying to do something critical to you, so then that scenario, that setup using MT4 is not ideal. Okay, maybe it would be better that you hire a programmer that can program a routine that does what you want to do, and then your forex broker probably can provide you with an API, okay, which stands for Application Program Interface. And that API basically is a connector by which a software you have paid someone to develop connects through the API into your forex broker, and that could be now a piece of code which is maybe more stable than MT4. Okay, because it's not a whole platform; it's only one code running your process only. Okay, so that could be more efficient, but at the same time, certainly now you need to get into the world of looking for a programmer, one that is specialized in trading, one that understands and have programmed before MTI APIs, that connect with forex brokers. So again, it becomes complicated. Okay, so another way to answer this or to find a technical solution to that is to look at what is known as VPSs. Okay, so here Osman says, I am aware of the limitations of using one computer failure internet, so I'm thinking of using it in a virtual private server. So let me know what your thoughts are on that, and hopefully I will catch up with you on the next sharpening session. Okay, so what Osman is suggesting is, okay, so instead of installing in my computer, okay, let's say the box on the left, it's your own computer. Okay, your own computer. Okay, I'm just gonna say your own PC because MT4 runs on Windows, so I'm just gonna call it your own PC. So instead of installing MT4 in your own PC, that was not my plan, sorry about that. What you could do is, so the box on the left is your own PC. So what you could do is get into a smaller box, okay, which is what is called a VPS, okay, which stands for Virtual Private Server, which is basically you connected with one of the VPS companies available out there. There are many, many, many. Okay, I use VPSs all the time for my trading. In case you're curious, I use a company from Germany called Contabo. They actually recently started their own offices in the US as well. So they have servers in Europe and in the US. Even if you're in the US or in Asia, using servers in Europe is more than fine. So that's the one I use, just in case you are wondering or you're curious. But basically, there are many other companies, and the service called VPS, that stands for Virtual Private Server, basically is that you are connecting or using a company that have massive servers, and they have very high quality internet connections, and those connections are redundant. So they're using different internet providers that connect to that building. One may be using fiber optics, the second one may be utilizing some sort of microwave service. So they have redundancy. And basically what you do is that you hire a micro space inside their servers. So it's not like you hire a computer inside their building. What you hire is within their very large, powerful servers, you hire some space in it. So you have access to some CPU time, you have access to some memory, RAM memory time, you have access to some hard drive space. And basically that emulates, okay, it emulates a Windows machine. inside their server. And in that sense, you can go ahead and install your MT4 and run it on the cloud this way, which is quite stable. Okay. My advice is not the best way to do it like that for MT4, because the MT4 it's again, I don't mean to say it in a mean or unrespectful manner to the company that developed MT4, but MT4 by default is a software created for retail, right? And therefore it's not the most robust platform in the world. So yes, if you do install MT4 in a server of this sort, like a VPS, the beauty is that now you benefit from the fact that you do have redundancy on the connection with the internet. You do have probably more powerful, servers and technology. So all of this is good, but in the end, you still have a Windows running MT4, and you know that Windows may crash. You know that MT4 may get hung. So this thing could happen, okay? And that being in a VPS environment doesn't help for this to not to happen. Okay. Basically, the VPS is helping with the fact that now you have it running 24 hours, and if the internet drops, that's not a problem. Okay, but the reliability of the service is going to be about the same. Okay, so option number one, I'm going to give you three options basically for that. So option number one, it's to have it on your PC. We talk about the pros and the cons. Option number two is to use a VPS server, okay, which you gain some more reliability. And option number three, which in my mind is probably the most powerful and logical solution if you're really serious about that, is that instead of utilizing a VPS, okay, what you do, okay, so this is your PC, okay, so this is your PC. Here in the middle is using a regular VPS service, okay, and here on the right, okay, what I'm proposing to you guys, okay, is an alternative that very few people use, and to me is the best, is to use MT4 on the cloud. Okay, so there are not too many really, but there are some companies out there in the world that do provide you with the option to have MT4 on the cloud, meaning that the way you connect with MT4 is utilizing a web browser. Brokers don't provide that, okay? But there are companies that do provide that. So you have MT4 on the cloud, so you use a browser, just like when you use TradingView. So you use a browser to connect to your MT4, and the credentials, when you enter that web browser, are the credentials from your broker. So in other words, those companies that got MT4 on the cloud, they do connect to your broker, so you can execute via your broker, even though your MT4 is fully on the cloud. You have very stable servers, very stable processes, you have very stable connections, redundancy, and that's a way more flexible and powerful solution. Especially now, if you think about Osman, who happens to be busy and doesn't have time to maybe turn on the computer or things like that, or maybe also connecting remotely to a VPS may imply that you have some software in your computer. So maybe now you're in the office. So what do you do in the office? Well, it's not your computer, so what? So you still get into a browser and you can get into your MT4 on the cloud. So I think that is a more solid type of service for that particular type of need. Okay, so again, in this beginning part of the answer, if you think about it, we didn't talk about trading at all. We're talking about purely technology, okay, which is, one of my hobbies. Used to be many years ago my profession actually. So I love it. Okay, but let's now take the technology into trading, which is the purpose of these sessions, isn't it? Even though trading and technology goes hand in hand, you cannot separate. But let's get back to the beginning part of the question from Osman. Now that we understand what is MT4, what is expert advisor, and the fact that you can use MT4 in those different scenarios, okay? Let me go ahead and talk about, the issue, the real issue, which is, trailing stop, what happens if I have the time, what if I'm not reaching my target, all of those different things, okay? Good. In the meantime, just before I get into that, I want to double check the chat box to make sure everything is good. Good. It seems that everything is good, even though it does seem as well that you guys seem a bit quiet out there. So a quick confirmation that all is good would be appreciated. A quick all good, a quick okay, that would be good for me to see. Again, and by the way, if any of you ever wants to check, if hey, I've seen this service, what do you think? Or I've seen that provider, what do you think? Feel free to shoot an email, including if you like some tip on when it comes to which companies I could recommend. So more than happy to respond to your emails. Okay, but now putting technology on the side, let's talk about the issue, right? So first of all, Um, in trading, okay, and I want to bring, let me bring a few screenshots on the screen. So I am sure 100% that we are in the same page as we look at the screenshots I'm about to bring in. Where are you? Here we go. So in trading, one of the things that we do is utilize a flowchart. Okay, so that's nothing new. We've talked about the flowchart many times, isn't it? Many times before. So this is nothing new. Now, another thing that we do, okay, and one sec, because I do need to pick another file here. Okay, here we go. I have it. So another thing that we need to do as well is that when we trade, we need to define the time frames that we use. Okay, the time frames that we use. These are the set of time frames that are the, let's call it the classic time frames. Okay, that we have. When we do the application of everything we do, we use those time frames. We also have the future time frame equivalencies that we use. Okay, you've seen this table before, I'm sure. We use it many times in the sessions where, now apart from minute time frames, we also talk about share time frames, tick time frames. So basically I'm talking about time frames and the flow chart, which basically leads me to talk about your trading styles. So the flow chart and the time frames, okay, has a direct impact to the amount of time you need to trade, but also the amount of time you need to manage your trades. Why? Well, one of the reasons why is because when you look at the flow chart, the beginning part of the step there, okay, with a clock, okay, it's, and I'm just gonna read. It says restart with each close on the common time frame. So in other words, if your common time frame is gonna be the 1 hour time frame, that means that you as a trader would need to relook at the chart every time you got to close on the 1 hour. In other words, every 1 hour you will need to be checking your charts. So maybe you have you have a schedule in your life where life allows you to maybe trade for 5 hours a day, okay, which I think is way too much, but let's say that was your case. And during those 5 hours, you got 5 opportunities to recheck the whole process 5 times. Okay. So then if you have that amount of time and this is your style, you sit in front of your computer 5 hours a day. So then you would have no issues with planning the trades or the management, because basically everything restarts every 1 hour and you are there at that time. So it's fine. Another type of trading could be that you say, okay, I don't have 5 hours, I only have 1 hour or two, but I'm using the 15-minute time frame, okay, as a climate, which is, again, it's available here, right? 15. Well, actually, not in this table because I'm using, not in this table, but when we do futures, isn't it? We start with the 15-minute time frame. So I won't go research the other table if that's okay, because to make my point is the same. But there is another set of time frames where the common time frame we use is 15, and therefore that means that every 15 minutes you will need to restart the process, look at everything again, etc., isn't it? And again, if you trade for an hour or two, so 1 hour will give you 4 opportunities to recheck and validate a trade and do your trade management, and probably that's good enough, and you're gonna be like, that's my style, done. Okay, so bottom line, the time frames that you decide to use combined with the flowchart has a direct impact on the compatibility of that style with you. Okay, so for example, let's say you work in an office and you want to do position trading. Okay, you want to do position trading, and one of the styles with position trading is to use the daily time frame for climate purposes and beginning the process, right? And meaning that every day you have to review the trade. Well, that's a great style. That would be a great style, because even if you work in an office, you only need to find time to once a day recheck the markets. And by the way, if we are dealing with markets such as futures or Forex, which are 24-hour a day trading or almost 24-hour a day trading, well, then that's great. Even, maybe in the evening hours, maybe in the morning hours before you go to the office, you have time to check, and that's fine. But the problem that I see many times is that traders, they may want to be more active, either because they want to learn faster, either because they want to make money faster, either because their account size is more limited and larger time frames don't allow them to trade unless it's very tiny size. And basically, traders decide that I'm going to use an intraday style or something very active, even though I work in an office or I have other responsibilities, and I'm not able to go ahead and check my trades as often as I need to, but I still want to do that because of all those reasons. Well, I'm not sure if this is your case or not, or Osman, in this case, but this is my first observation. The first thought that came to my mind when reading your question, which again is a normal thing, is that maybe what Osman is doing is that he's utilizing a trading style not compatible with his life. If you were to move to 240 daily, weekly, maybe monthly, so now certainly you would find much more time, or another way to say that is you will need much less time in front of the charts, and these now maybe would provide what you need. Okay, so keep that in mind. This is my first observation, because maybe by simply changing your trading style, you don't need to use expert advisors and MT4 and VPSs and things like that. Maybe now you change style from 60 to 240, from 240 to daily, and next thing you know, now it's fine. Come back home every day in the evening, review your trades, peaceful, no rush, have time to do management. So again, this is something for you to consider, because this is often, and again, I'm not saying that's your case, but it is often, one of the reasons for this type of question. Okay, so let me see here. Let me bring the remaining part of the question here, because there is more to this answer. Okay. And by the way, when I'm done with this question, I am more than happy and ready for your questions as well, guys. Okay, so if you guys have questions, you could either type them already on the chat box, or prepare them maybe in an external Word document, and then you copy paste or something like that on the chat box on the YouTube channel. Okay, but just keep that in mind, that after this I'll be looking into your questions. Okay, so now, so again, back to the question. I have a question on trailing stop. With some of my trades now reaching the final target, which is normal, not every trade will reach the final target, and coming back to my original stop loss or stop loss entry, as you can see, it's very hard, managing the trades, blah, blah, right? So again, answer number one, maybe you want to evaluate if you are doing the right style, or you should change your style. Okay. Answer number two, coming back to the flow chart, okay, you have multiple techniques of risk management that where some of them are optional. So maybe in your case, you are really borderline between one style to the other style, and you have a difficult time deciding what style is best for you, what time frame. So maybe one way to test the waters of different scenarios, and spend a week or two doing it like that to see how comfortable you feel. I'm talking about purely convenience as a human being doing something, right? I'm not talking about performance, but just for you to see how you feel about it when it comes to the use of your time. Maybe another thing you could do is to utilize less of the 7 trade management techniques that we have there. Maybe you want to look into utilizing less. 3 of them are optional, so maybe you want to not utilize those 3, or maybe utilize 1 or 2 less. And also maybe another possibility is to create variations of the other time frames, okay, of the other methods. For example, climate change. Well, if you got a climate change, but it's in some other intermediate time frame. So normally you have, let me write it down. So normally you have, I'll do it here. There you go. So normally you have the common time frame that we use for climate identification, right? So common time frame equals climate, right? And let's pretend that you are doing 240 minutes for climate, okay? So what else do you need to do? You need to use the edge time frame, right? And that one, let's say you ended up using the 21-minute time frame, okay, which is the standard application of our method, right? So let's say that you are doing that, and you're like, well, it's okay, but at the same time, I don't have time to look at the market every 4 hours to see if there is a climate change. Okay, maybe I don't have time to do that. So what can you do? Well, maybe for management purposes. Okay, so we are talking about trade management purposes. Guys, give me 1 second. I'm having a little issue with my pointing device. 1 sec. I should be back to normal very, very soon. Actually, yes. Yes, back to normal. Great. So sorry for that. So again, uh, we're talking about trade management purposes. Okay, I'm not talking about changing the common time frame for the process. Okay, I mean you could do that, but then you will need to go back and re-back test everything that probably you already back tested, right? So then another thing that you could do is just by only looking at trade management purposes. Okay, we have a rule here on climate change, for example. So what you could do is the climate change would imply that you need to close the trade right ahead of time. So maybe one thing that you could do is to explore with other time frames. So instead of using the 240-minute time frame, okay, maybe you can look at what happens using the daily time frame. Okay, and of course this is gonna make you a bit slower. Okay, it's gonna make you a bit slower on um, the catching a potential major turning point against you, and it may not help as well. But at the same time, if that's the only thing you could do, so then that's better than nothing, right? But so again, you could consider doing that. Okay, another thing you could consider doing is, okay, instead of approaching it this way, where you're and I'm just having a little problem here with my keyboard and my pointing device, guys. I'm not sure what's happening with my receiver. Maybe I need to change the batteries. That's that simple. Sorry for that. But anyway, so what I was saying is that maybe as a common time frame, okay. So instead of 240-minute time frame, which I'm assuming that, let's say that that's what you use. So maybe another thing you want to do, coming back to my prior comment, is use the daily time frame. So change your style to be slower pace. But you may say, but wait a minute, that's too slow for me. I want to be more active. Okay, so then you could be more active maybe with the management of climate only. Okay, and only for trade management. Okay, so instead of utilizing the climate with the daily time frame, now you use the 240-minute time frame, the 4-hour chart, to do the climate change as a management. So you can be a bit more active with the management, while you can be a bit more passive with the planning of the trades. Okay, so those are actions that you could take. Okay, those are actions that you could take, and it's all about finding what works for you, but also you need to keep realistic, because again, most of the times the origin of your question, which again is a very good question, and I know, Osman, you are putting lots of time and effort into developing yourself, which is the way to go. But at the same time, I've seen it often enough to comment without knowing if it's your case or not, but I've seen it often enough where students are trying to be more active than what they should or they could, given their other responsibilities in life. And you create the false impression to yourself that, okay, I'm going to practice a lot, maybe with a paper money account, trading very low time frames, so I create a lot of experience. And then when I'm ready to go, then I'm going to trade real money, but then I'm going to use slower time frames, larger time frames. Okay, and guess what? Now you made a mistake there, because the outcome from a larger time frame is going to be different than from a smaller time frame. You didn't know that. You didn't know what to expect. Okay, and on top of that, the impact of emotions in trading will also be different. And when you start adding those changes plus real money plus the impact of the emotions, so all of those things may put you in a situation where it's not working well for you, even though your simulated trading was great. Then when you went live, there are too many changes, too many variables that change, including the time frames, and then it's problematic. So my recommendation is sometimes in life less is more, and maybe less trades, larger time frames is going to produce actually better results for you than lower time frames with expert advisors and a lot of complexity. Even though your intention is great, you make it complicated, and many times in life, simple works, less is more. Is that making sense? So you need to evaluate all of this. Okay, there is not an answer which is black or white, because again, it depends on who you are, your personality, your account size. It depends on many things, but that would be my recommendation. Okay, now there is more when it comes to this question. Okay, which is also, now I'm back to the pure concept of trailing stop, because if you think about it, as of now, everything I commented on, okay, everything I commented on as of now, okay, has to do with manual actions. So you have a climate change. Okay, maybe I alleviated the problem a little bit by changing the time frames. Now it's a bit more doable, but it's still a manual action, right? It's still a manual action. So your point with trailing stops is to have the stops to move automatically for you. Okay, to move the stops to move automatically for you. So I'm gonna tell you why I think that it's not the best idea. even though if you were to do it, I'm going to show you how you should do it. And it could be okay, but I will tell you why I think it's not the best idea, and I will propose an alternative as well. Okay, so here is, for example, TradingView, right? Here we go. So here's TradingView. So let's say you did manage to get. Let me see if we are lucky enough. If I move here, so somewhere here, and I turn on to UFOs. Do we have a UFO there? Yes. So let's say you are looking at this chart and you see the UFO, and let's say that was the beginning of the climate, and the UFO coincides with the EMA, and you have the climate defined in your favor, and you say to yourself, okay, you know what? If price comes here, I am going to take a trade. No, not there. Here we go. So if price comes here, I'm going to take a trade in this price range. Sorry for my keyboard today, guys. But if price comes back, I'm going to take a trade there. Okay, so let's say this is what you're thinking, right? And let me make the speed to be not too fast for the playback. So now I am replaying the market, okay, and the market is doing its thing, and the market just came to you. Okay, so we just got filled on this particular candle. Okay, let me zoom in. I guess you can see it. Okay, in this particular candle right there, the bottom part of the wick did enter where the UFO is. So we're in a trade. Okay, and now it's moving your way. Right? It's moving your way. I guess it's moving your way. It is moving your way, and it's moving your way very fast. Okay, so let me maximize that screen. Okay, and bring this down. You had this major move in your favor, okay, all the way to that location. So if something like that happens to you and you have a trailing stop, okay, and your trailing stop was located originally here, okay, below the UFO, okay, so the blue line is your trailing stop. I'll make it black color so that way it's easier to be seen. Here we go. So if this is your trailing stop, right, and price is moving by that amount, okay, so you may decide, you know what, every time price is moving by that amount, I am just going to go ahead and move the stop by the same amount. Okay, so that could be one way on how to do it. So every time price, okay, is moving by that amount, so move the stop by this amount, right? Now price is moving by this amount again, so then you move the stop to here. Okay, and this you could automate this with a trailing stop on MT4. You just tell MT4 how many pips is that, how many ticks, how many points, how many whatever, and it will move automatically, right? So price is moving by that amount, so now your stop goes up by that amount. So if that was to be the case, the beauty is that now if this currency goes back down and stops you out, well, you are out. Okay, but the good news is that you have capitalized on a very powerful move from entry to the stop out point. Okay. Now, even though it looks really beautiful in this case, okay, it really, really looks beautiful in this case, the problem of doing it this way, okay, is that, most of the times when you trade, and please feel free to comment on the chat box, okay, I mean, how often do you get into a trade and you have a move like that, okay, such an explosive, fast, vertical move, moving towards your target? How often that happens, okay? And while you guys answer, I'll take a sip. So, yeah, Mark, coming back to you on the heating oil, yes. Yeah, Marcus. Well, trading styles has to do with you, and the fact that options have expiration dates doesn't mean you cannot trade beyond that date. You just do what is known as rollover. And the fact that they are earnings, that is a limitative situation. and that may imply that you need to avoid a trade from time to time, where that could be there could be many reasons in the market that force you to avoid a trade. Earnings is one of them, but expiration dates in options absolutely have nothing to do with trading style, because even you could buy an option, which is not the way to do it, by the way, but you could buy an option that expires next week, and you're going to be in a trade for 1 month. So every Friday you roll over into the next week expiration. You just keep rolling over. You'll pay more commissions, but certainly it allows you to stay in the trade as long as you want. So that's not a problem. Froilan, all my trades are like that. Love it. I appreciate your sense of humor. Roy, not that often, exactly. Mark, not very, exactly. That was my point, and that's why I ask. And thank you very much for participating and being engaged and answering my question there, guys. And in other words, what I'm trying to say that a trailing stop that trails by a certain amount works very well when you have a move like that. But given the fact that moves are often not like that, okay, I mean, let's say instead of this trade, okay, so I'm just gonna go back to my market replay, okay, and I'm just gonna go back in time sooner. So let's say we are here, okay, and we have the same situation, okay. Okay, not there. Let me look for a better example so you get it. Here we go. Here, okay. So let's say we are there, okay. Let's say we are there, and you see those, those two UFOs, okay. On they are grouped together given how close they are from each other, isn't it? So what would you do? You would identify this price range there, okay? And oh, I know what's happening. I got the magnet. That's what it is. Here we go. So you would identify those UFOs there, right? And now if I click play, okay? So price comes into one of the UFOs. You would be in the trade, and now price is moving your way, right? Okay. Now let me fast forward how fast price moves your way, but notice the price action now. Notice the price action. Okay, notice the price action. So what would happen to a trade like that? Okay, which by the way, patience pay, you would have ended up making a very beautiful profit there. Okay, you would have ended up making a very beautiful profit in this trade. But at the same time, with all that mess at this particular time, and we have no control over that, with all that mess, when price went up, your trailing stop may move up and then you get stopped out there. So in other words, basically it's a waste of time. You miss the best moves, and you just add frustration to your trading, because then you see the beautiful move happen and you are not in the trade because you got stopped out, because your trailing stop was trailing times let's call it a random amount, okay? Because in the end, it's going to be random. You're going to have to pick how much, right? It's going to be 5 pips, 10 pips, 20 pips, whatever it is. You're going to have to pick that number, and therefore you will not be able to really capitalize on those moves in a proper way unless the move is a major one, okay? And those don't happen that often, okay? Yes, I know, Frolian. I got your sense of humor. Yeah, yes, I'm with you, my friend. Yeah, again, I very appreciated that you added a joke there. But yeah, again, trailing stops, are, as you can see there. I'm not a super fan of it because of that, right? So now, if you were to use a trailing stop, how should you approach it? Okay, because again, everything has pros and cons in life, and certainly in trading is like that, because we don't know what's going to happen for sure. It's all about probabilities. So because it's all about probabilities, there is always a compromise, and there is always pros and cons. If you do this, you have this benefit, but you have this problem. If you do that, you have that other benefit, but now the other problem, it's whatever. So how can you approach it? Well, what I would do is, instead of setting a trailing stop based on any random preference, like for example, I'm going to use trailing stops using 10 pips, okay? So what you could do, okay, because certainly there will be times where they help, okay, especially if you're a busy person. But if you were to use a random value, that's the problem, right? So instead of using a random value, what I would suggest doing, okay, and I'm just going to go back to here, okay, to this example here that we had, right? Okay, this example here, where the top part of this UFO right there, that would be your entry, okay, and the bottom part of the UFO right here, that would be your stop, okay? So in other words, you got 57 to 39. Okay, that's 57 to 39, correct. So that is 18 pips. Okay, so the size of this UFO is of 18 pips if I did the math correctly. Okay, so your stop is going to be below that, by the way. Your stop is not going to be 39. If you use the rules, isn't it? The stop is going to be 34. So the stop is going to be much lower than that because we always add breathing space because we are dealing with a decentralized market, is Forex. But whatever your stop is, based on your rules, what I care about is the size of the UFO, which in this case, it's 18 pips. Why do I care about that? Well, I care about that because prior to the entry time, okay, prior to the entry time, the volatility condition in the market was such that it produced a UFO of this size. You need to know, and we discussed that in prior sessions before, that the size of the UFOs is directly proportional to the volatility available in the market now. If you look at UFOs in 2008, if you look at UFOs in the month of, depending on which market you look, could be February, March, or April, with equities, crude oil craziness in this 2020 year with the pandemic and everything else. So depending on when you look at that time in 2020, or you look at 2008 to pick another extreme condition, and you would have very fat UFOs everywhere, right? Where if you were to look at other times, like, for example, I'm thinking of 2011, I believe was a year where the S&P started and ended in the same place. Basically it was flat. Market went up, went down, went up, went down, and January and December, the S&P was in the same place. If I'm not mistaken, it was that time. It doesn't need to be that time. It doesn't matter. But my point, if you look at a very quiet market, okay, then the UFOs, instead of 18 pips, they may be 5 pips. And it's the same market. In this case, the US dollar, Swiss franc, right? So volatility conditions, okay, are key, okay, are key to trail your stop in a way where you don't get stopped out and you don't miss the move to come. So in this sense, my recommendation to you would be that since that UFO is the nearest to your entry and is the nearest in time opportunity for you to measure what volatility is being, so I would look at the vertical distance of the UFO, and even though the entry to the stop could be of 5 additional pips, okay, it would be 23 pips because we normally add 5 pips additional as a breathing space. So even though from entry to stop, you're going to have 23 pips of risk, you would now use a trailing stop technique where every 18 pips, you move your stop. That may save you from many of those retracements and comes back up, retracement, come back up, because now you are giving yourself enough breathing space for all this, noise to happen until the move finally happens. That is one smart calculation to be done, even though it is not a guaranteed, and still there will be many times where you will miss the move because your stop was too close. Now, you may say, okay, what about instead of 18, I multiply this, I add, 50% extra. Okay, now we just keep adding randomness, isn't it? So now we are just hoping to not to be stopped out, which somehow it's showing you kind of like with a lot of evidence, the disadvantage of using a trailing stop. So if you're going to use it, I would say use it because it gets you out of trouble. Use it as a protective tool, but don't use it as a greedy tool that allows you to capture the best moves in the market, because then the best thing you can do is to rely on the climate, because the climate tends to propagate, and that is what will normally keep you for longer in a trade that travels faster. So again, this is one consideration if you want to incorporate trailing stops in your trading. Another consideration that you could have is adding, for example, and this I'm going to show it to you on the screen, but this cannot be done manually because that now it's too tedious. Because basically what I'm about to tell you is that the location for your trailing stop changes every candle. So this can only be done with expert advisors now, or if you use other platforms, however they call it in that other platform. But let me get here another indicator. I'm just gonna load I'm thinking AutoUFOs. Average true range. That's what I'm thinking. Average true range. Okay, so I'm loading average true range. Average true range is an indicator that measures volatility. Okay, and you can see it goes up, it goes down. So there are times where the market is volatile, okay, and moves fast, okay, or now that the market is moving faster, okay, and as the market is moving faster, you can see how the volatility goes up. You can see when the market is quieter, right, volatility goes down. You can see that. Okay, you can see that. So one thing you could do is to calculate some sort of an average. Okay, and this you can do it programmatically. Okay, again, I'm just gonna do it visually so you understand the concept. But the idea would be to calculate some sort of an average of what a normal ATR measurement is. Okay, and let's say the average is like 6 pips. So let's say that's the case, that as an average, the 21-minute time frame produces 6 pips of movement. Okay, so now every time the ATR is above that value, then your trailing stop is very close. Okay, and every time you are below this value, then your trailing stop is wider. So what would that do to you? It would give you breathing space. Okay, so for example, you are trading at that time. Okay, you are trading at that time. It's very volatile. Okay, so let's go back in time to then. Okay, so we are here. So we want to enter in this box. At this moment in time, we are in a volatile time in the market, isn't it? We are above the black line. So the volatility is above average. Okay, so what would you do? Okay, well, you would take that particular price range, which is your entry. In this case, by the way, it's double the size because we got 2 UFOs, but that's just a situation that happens in the market. Good news when you have 2 UFOs, you have more odds. Bad news when you have 2 UFOs, you have more distance between entry and stop. This is what it is. We cannot change that. Okay. So now, how much is this? Well, we got 94.36. Okay, 94.36. It's the top part, and 16 is the bottom part. So in other words, at this moment in time, if I was to draw the vertical distance between here and here, okay, at this moment in time, we're talking about 20 pips. Okay, so distance 20 pips, we can see here. Okay, so what would I do? Because the volatility is high, I am in a situation where I am more likely going to see one of those spikes that don't happen often. So what would I do? I would take my stop 10 pips away. I would do a trailing stop 10 pips away. That's what I would do. Okay, so I would go for my stop, let me rephrase that just in case it was not well understood or not well said. Okay, so this is gonna be your entry, right? And this is gonna be below the UFO. This is gonna be your stop. And the distance between, if the UFOs are 20 pips, we always give ourselves 5 pips additional of breathing space. So it's gonna be 25. So my initial location for the stop, it's going to be 25 pips below price because that's what the UFO suggests to be. Okay, but now, as the market comes to me and starts moving higher, the moment the market moves 10 pips, okay, the moment the market moves 10 pips, I'm just gonna move the stop with it. 10 pips, 10 pips. Guys, give me 1 second. Believe it or not, I am about to sneeze, but it's not coming. Anyway, so because we are at a time where volatility is high, then you trail the stop more closely. So if you were to have one of those spikes, right, and it was to reverse on you, you give up very little money. Okay? Because you are in a high volatility condition, you do that. Okay? So you can do that programmatically. Okay? Now, if I play, it could be, because this needs to be recalculated each candle, okay? It could be that a few candles later, okay, what happens now? A few candles later, now, we are in a volatility condition where now volatility is low. So now we may be in a situation now where we are about to see some mess. So what would you do with the stop now? Well, now you would trail the stop by 20 pips instead of by 10 pips. In other words, you are not eager to trail your stop any longer because you are in a low volatility condition, and therefore, you're going to have more noise in the market. So these you can do programmatically, and this is likely going to improve your trading results in the sense of not having so many um, stop outs and then you see it go, right? But still, this will continue happening from time to time, less often, but still it will happen to you, and it may create a little bit of frustration. Okay, so in my mind, really, what I like to do the best is to utilize UFOs to do my trailing, and if I don't have time to do it, then I just use a different time frame and I make my trading to be compatible with my life. And that way, instead of relying on a semi-random figure, I am relying on UFOs, which is on-field orders in the market, which is a direct force, and it's more powerful than mathematics in this case. Okay, so that's what I would do. Last comment for you, okay, because this is purely trading stuff, but then there is another thing that we need to do as traders, which is to watch the climate. Okay, so what you could do with the climate, okay, it's like so let's say you are trading. Let me go back to normal. So I just want to delete everything I've done here. So I'll delete this and that. Here we go. Go back to normal, here we go. Okay, I just got rid of everything. So now talking, this is just purely trailing stop. Okay. Now, what about climate? Well, with climate, what you could do, okay, on TradingView, and by the way, on TradingView is kind of like when I told you earlier, I was talking about the MT4 service on the cloud. So TradingView is the same. It's a service on the cloud. So in other words, if you add alerts, okay, they are not running on your computer. You can have your computer off, and you can have your TradingView app on your phone. And if an alert triggers, you will get a pop-up alert on your mobile phone because, again, it runs on the cloud even if your computer is off. So what you could do is you could right-click and you could add alerts. And those alerts, they could be based on the price of the Swiss franc. They could be based on the EMA. They could also be based on AutoClimate. Okay, they could also be based on AutoClimate. Okay, so you could do the following. Okay, here are a few choices. So when the ATR spread, which is this vertical value, right? So when the ATR spread becomes negative, okay, you may have a change of climate. It's not guaranteed, but many times when you have a negative spread, the next candle is a change of climate. So what could you do? You could set an alert where you say, if the ATR spread crosses 0, okay, goes from positive to below 0, okay, then notify me. And that will give you a notification in the current candle. Let's say, talking about time frames, okay, let's say you're using the 4-hour time frame, okay. So during the current 4 hours, you're going to get an alert at some point telling you that when this 4-hour candle closes, you may have a change of climate. So now you could be very specific. You could just set up an alert, not an alert, but an alarm on your phone that says, hey, 45 minutes from now, I have to check. Or 1 hour and 20 minutes from now, I have to check because this is when this candle will close. But you get a little bit of a heads up before it happens. And that way, even if you're busy, you may be able to catch those changes of climate before you come back home at the end of the day, and then you realize it's too late. Okay, you can just watch those in the middle of the day. Okay, so that could be another way on how to combine it. This is not automation. This is not an expert advisor. This is just a simple alert, but it's probably quite useful. I would say it's certainly useful for most traders. If you are doing different things during the day, and you get those pop-ups on your phone, and now you're like, oh wow, wait a minute, now I need to be on time in front of the screen because that may happen next candle. Okay, good. Okay, so hopefully this helps. So that is, by the way, the complete answer to this question. Okay, it took me 1 hour, so now you understand why I could not send an email. And also, certainly, I thought that this question was going to be useful for many. So please comment on that if this was useful to you guys, if you got you thinking about certain things. I would love to know. In the meantime, I'm just going to go back to the chat box and see your comments, as well as the other questions that you typed. So Um, Shino, hi Jose, how you set up stop loss in stock market? How can I find live trade with UFO in stock market? Well, we don't do much of this, to be honest, Shino. The process is exactly the same, okay? But we don't do much on of stock trading on the channel because we kind of enjoy utilizing options more, right? So if I go back to trade with UFO slash get together, okay, which is our page, okay. So you see the schedule here, okay, and what do we have? So some of these sessions are short term. I take care of those. You can see my name there, Jose Blasco. Then we have sessions which are longer term. I take care of those. You can see my name there, Jose Blasco. These are the sessions where I normally use options, and certainly we analyze stocks, but the execution is options. The ones with the green color short term, normally we do forex and futures, mostly futures. But then also, I don't know if you have noticed, we have added nailing effects. Okay, I'm not sure if you have added this. By the way, this also comes not only with more sessions, but also with more instructors. So you can see Bert, Antonic, you can see Chirian, Matthew, you can see Andrew Han, you can see Bert Antonic, you can see Pedro Mejias. Again, a collection of other instructors with which you could certainly work. Okay, now those sessions are only forex. Okay, so I'm kind of diverting from your question. And then we got the orange ones, which are sharpening, which I do myself as well. And here we talk about the type of things we're discussing today. Okay, so why don't we have sessions on stocks if you wish? Well, to be totally precise, okay, we do sessions on stocks, but not here. So if I look at tradewithufos.com and I click on join, okay, and I assume that all of you know very well all the different things that we do. So, under the Trading with UFO membership, okay, we get together on the YouTube channel, and, we are supposed to be dealing with CFDs, cryptos, and Forex. And to be honest, we're doing much more than that, okay? But there is another place, okay, inside You Can Trade, where we are dealing with equities, options, futures, and, equities is stocks. So if I show you the schedule, it should load here. Here we go. So you can see that every Tuesday and Thursday we are doing stock trading. Okay, and this is stocks and stocks only. We are not doing other things. This is only stocks and stocks trading only, without adding anything else. So this could be the place where you will get the greatest benefit if your only interest is to trade stocks. Having said that, again, going back to your question, trading stocks doesn't need to be different compared to trading any other market. So if you load Microsoft, okay, and I'm just gonna pretend we have a trade here on Microsoft to go short, and you have a UFO there. So this would be your entry, and this would be your stop. Okay, and then you find a target, and that's it. So the application of the method is the same. The very big difference, and another reason why we are not dealing with stocks like stocks only the way you would anticipate, is because stocks are a fragile asset by themselves. If you think about the S&P 500 index, it's made of the 500 greatest companies in America. If you think about the whole US market for equities, is the biggest in the world, and is made of 8,000 over stocks. So you may think that it's a big market. Well, let me tell you that futures is 3 times the size of the whole stock market. And imagine then if you were to trade Microsoft only, even though it's a very relevant company, it's only one company out of 8,000 over stocks, knowing that the whole stock market in the US is 3 times smaller than futures. So in other words, stocks by themselves, they are fragile. They depend on the sector, they depend on competitor stocks, they depend on the S&P itself, they depend on what's happening to Microsoft in other exchanges in other countries. It's quite common that when price comes into a UFO, next thing you know, maybe it goes find the next one, and then it falls. And if you took the trade and you had your stop there, you got in trouble. And the reason why it didn't work here, and the second time it did work, it's because the S&P was not in a UFO when you took the trade on the Microsoft, okay, or the sector, or maybe Apple or Google or Oracle, companies that are related, were not in their UFOs, and therefore they were not enough unfilled orders to sell for the technology sector, and that's why Microsoft didn't start moving your way soon enough. So it's trickier, and normally when we deal with stocks, it's more like a portfolio. And in the channel, I meant to say in the YouTube channel, I normally utilize options because now I can do what we call gamma hedge and do other things that produce certain benefits. Okay, so that's why. That's why. But know that if you were to use stocks, okay, the application is exactly the same. And certainly, if you were to keep it pretty low time frame, which require your stocks to be very liquid and require you to have a large account, but if you were to keep it pretty low time frame, you should be quite okay. But again, you have all those disadvantages. So really going the route of trading derivatives and equities is normally more powerful. Unless, and this is my last comment about stocks, you move to the complete opposite extreme, which is now you are not a stock trader, you're a stock investor, and you want to collect stocks just so you collect dividend payments and other benefits, and you are holding those stocks maybe for 5 years. Okay, so that's a totally different story, and you could certainly do that with UFOs. But now instead of looking at the 21-minute time frame of Microsoft, you will be looking maybe at the weekly time frame of Microsoft, the monthly time frame of Microsoft, and now look at that. You will need to buy so much lower, right? You will need to wait for prices to come much lower. I mean, in the monthly time frame, we're in a good place actually. But yeah, it's again, it's a different animal. Okay, so this is my answer to your comment or question. Okay, Ahmed, why my auto climate from the chart is different than the auto climate from the workspace? You mean the stats, Ahmed? Probably. Let me go back into TradeStation. I believe I am assuming, Ahmed, that you're using TradeStation here with your question. So I'm just gonna get into the short-term workspaces there. Yes, got you. Yes. And by the way, Mark, I haven't forgotten your question. I'm coming back to you in a minute. In regard of time frame question, I was thinking about buying versus selling. Yeah. Same answer to you, Ahmed, Marcus. You could do rollovers. If you need more time in your options as a buyer, you can roll over. Okay, so why is it that sometimes here you see 8, 264, and then you look at the S&P climate, let's open it up, and it doesn't coincide? I believe this is your question, Ahmed, and the answer is quite simple. Okay, but I believe that's your question. Yeah, or in Forex. It doesn't matter. If it's Forex or futures, it doesn't matter. The answer is the same. So notice how here, if I look at futures, the stats are, let me zoom in, the stats are 343, 588. Those are the stats on the chart. If I move to the red screen, the stats are 264, 803. How come they don't coincide? The answer is very simple. The amount of candles that you load here, okay, if I edit auto climate, okay, you have load additional data for a cumulative calculation. It says 200. So the red screen is doing the math with auto climate with 200 candles, which you could change. And my chart in this particular case, and TradingView will be different too, my chart in this particular case is utilizing 500 candles. So obviously the stats are going to be different because the sample size is different. That's the reason. Does it matter? No, it doesn't matter because you are not using the red screen to plan or validate the trade. You're just using the red screen as a tool to save you time and simply focus on the golden alert. And then on the chart, you will do the whole planning and the whole review. So that's good enough. Now you tell me, hey, I'm a bit perfectionist. I would like to have exactly the same. Okay, no problem. So you just get here into auto climate, and you will need to get into studies and use here the same values. Actually, little tip, that is not how TradeStation works. The red screen always needs more values than the chart to coincide. So maybe you need to type, let's call it 700 bars, and then the values will coincide. Okay, but that's the reason why you don't have exactly the same thing. Both in futures, Forex is the same. So going back to a Mark question, which I almost skipped. Just a small aside, the future timeframes sheet doesn't have timeframes for heating oil. Oh, you're right. You are right. You are talking about this one. Yeah. So I will need to work on that one day. Okay. Good one. Good one. I did not think about that. Didn't realize we didn't have it there. Marcus, as I understand, when buying options, we want them to expire after earnings. If earnings are soon, we probably choose lower timeframes than when earnings are away. Now, if earnings are too soon, then you pass on the trade. That's it. It's that simple. With stocks, you could afford that. We got thousands, so normally it's fine. You could go ahead and go to lower time frames, catch a short term time frame trade. You could also do that. Okay, but now you're operating multiple styles at the same time, which makes your life more complicated. So if you want to do that, it's not wrong. Your proposal, Marcus, makes sense. But at the same time, then it would create a portfolio which it's a bit weird because some of your trades are based on a time frame, whereas other trades are based on a different time frames, on a different time frame, and then it's going to be very difficult to balance. Unless you have two accounts, and one account you use it for time frame A, and the other account for time frame B. Again, you get my point, right? You are making it complicated. So my proposal is keep it simple. If earnings are too soon, don't take the trade. Done. You calculate time to target. Time to target suggests 40 days. Earnings are happening in 10. It's no way you're going to be able to reach the target before earnings. So don't take the trade. That's it. That's an easy solution. On the other hand, when selling options, we want them to expire very soon. So we would use lower timeframes. That's my confusion about choosing options timeframes. Now, you would, the fact that you want to use options that expire soon have really nothing to do with the timeframes. That will have to do with the current level of volatility. So the time frame that you use to do your non-directional trades should be whatever you have in your plan. Now, there will be times where there is a lot of volatility built in your options, and without varying the timeframes, you will find premium enough using options that expire, let's say, in 1 week, where there will be other times where options are, really lacking premium because everything is very quiet. And then you may need to use options that expire in 14 or 21 days, even though you use the same timeframes. That will depend on the amount of premium available in the options. It will not depend on your style. Okay. One way to understand that is look at the VIX. Okay. So through time, if we look at the VIX, okay, so VIX.X, and I'm going to move into a daily time frame. So if you think about the premiums collected, last year in August, compare the premiums that you have available now. So in August last year, it was like 10, 11. Now it's 36. That's like 3 times more. So with the same time frames, you will get options with, it's not exactly like that, but let's call it 3 times more, just out of oversimplifying here. But you would get way more premium. So, you can use shorter expiration days, even though you use the same time frame on the chart. Fermon, yes, you're asking about Gamma Hedge. So if you get into our YouTube channel, okay, so YouTube channel, and you have multiple playlists. So the one which is sharpening, which I'm sure all of you know. So if you get in there, you can type Gamma. Okay, and here we go, sharpening Gamma Hedge. You can go ahead and watch it. Yes. Why is there edge time frame and reactive ones? How to distinguish when we use both? The reactive time frames is, I'm not sure if you have taken our Forex course, but if you had taken our Forex course, you would know that the reactive time frames are time frames that are optional. So even though we have them on the set of time frames in the table, okay, so good eye, we don't use them unless you choose to use them. It's optional. And why would you choose to use them? Well, normally that's for conservative traders. Okay, this is for conservative traders that are looking for minimizing the amount of times where they get stopped out. And therefore, they are looking for more evidence. And therefore, what they do is, let's say you are planning a trade on the 21-minute time frame, and you know your edge time frame is 8. So what you would do is that you do the whole planning. You found a UFO in the 21-minute time frame. This is your UFO. Okay. This is your UFO. So now you are waiting for price to come here, and the moment price comes here, you expect it to go higher. So you could, option number one, not use reactive time frames and take the trade right here. That's option number one. But there is a possibility, unlikely if you are in the right side of the climate, but there is a possibility where the on-field orders could be canceled and therefore the UFO goes away. So what is a more conservative approach, which is the reactive timeframes? So then what you would do is that you would wait for price to come to the 21-minute UFO, and then you would load in parallel the 8-minute time frame. And with the 8-minute time frame, you're just watching, just watching, just watching, just watching. And the moment a UFO appears on the 8-minute time frame, you take the trade. Okay? You would take the trade here right now. Why? Because that UFO that appears, okay, that tiny cute UFO that appears on the 8-minute time frame, basically confirms that you found on-field orders where you thought you would have on-field orders, which is inside the 21-minute UFO. So in other words, you have a greater level of evidence and therefore a higher probability trade, even though many times what will happen too is that you have a UFO, price comes in, price comes out, and you never had the chance to get a trade, or price comes in, and when price is coming out on the 8-minute time frame, the UFO forms somewhere there. Okay, so you know it's time to take the trade. Way too late. You are already outside the UFO. Basically, you miss the trade. All of those are the disadvantages of being too conservative. The advantage is if everything goes well and the tiny UFO is formed inside the bigger UFO. So then you have evidence and therefore higher probability for the trade to be executed. Marcus, okay, thanks for a response. Of course, so easiest would be to just always use the same time frames in the scanner, most likely daily. Yeah, that would be the easiest. And again, nothing wrong with performing different methodologies and everything else. But I mean, I think I said earlier in the session, less is more, right? So let's keep it simple, guys. Wonderful, great questions, everybody. So, my friends, it's looking like we are reaching the end of the session. It seems that your questions are over, and I just need to say that it's been my pleasure, as always, to join you. I love the sharpening sessions where we can just chill, no rush, talk about trading stuff, go over questions, and it also it's a great time for me as well because. It kind of it puts it in front of me that you guys are putting time and effort into developing yourselves, and therefore you send the questions and very smart ones as well in the chat box, and all of this says a lot. Okay, so makes me very happy to see all of this, and keep up the good work, my friends, and we will see you in the next sessions. Okay, you take care, everybody. See you soon. Enjoy the rest of the Sunday. Bye bye, everyone.